Hello, welcome back. This is MMXM Maven. So today's video is going to be about how I approach the market as a day trader. Okay, this is going to be a little more technical video. So if you are a weak-minded, I think you should skip this video. Okay, this is not for the weak people. Okay, so before I start, okay, I hope you know what's a candlestick. Okay, if you do not know a candlestick, I'll just tell you in 1 second. Okay, so this is a candlestick, right? A candle is basically has a open, it has a low, it has a high, it has a close. If it is a green candle, it means the close was higher than the open. If it is a bearish candle, we have again same thing. We have open. Open is always here. Okay, open, high, low, close. So which one is a high, low, close depends on the color. So if it is red, it means the close was down here. Okay, here the close was up. That's why it's a green candle. Okay. So before we actually go into knowing how I trade, we should know what's a fair value gap. What do you mean by fair value gap? FVG, what we call. Okay, that's what my mentor told me. As you can see, this is one candle, so it's a 3-bar pattern. Okay, you need 3 bars for it. Okay, one of the 3 bars. So there's 1, there's 2, there's 3. Okay, in this the wicks. Okay, so this is called a wick. So this is a candlestick, right? So we have this wicks. We have this part. Okay, this part. The wicks of the third candle and the first candle. Okay, so the low, if it is a bullish fair value gap, it means the low of the third candle should not, and I say should not overlap with the low of the high of the first candle. Okay, so the low of the third candle should not overlap with the high of the first candle. Okay, so if we mark out, this becomes a area. Okay, it's called a fair value gap. Okay, as you can see, it's a fair value gap. And if you go to the bearish counterpart, same thing, the high of the third candle, okay, should not overlap with the low of the first candle. So this is your bearish fair value gap. Okay, yeah, so this is my strategy, but as you can see. Okay, so I like to show you what was today's trade. Okay, all of this was again taken on a fair value gap. Okay, so before we go into this, Nifty does have many spots in this. Okay, when I spots, meaning it has lots of these holes. As you can see, there's this incomplete price action due to gap up or gap down due to overnight price action. Okay, for this I want you to download this to use this indicator. It's called the no gaps candle by this guy. Okay, you can take any one, but I like these guys. And yeah, so this is how you can make the candles in this thing in one line. Okay, so as you can see here, this was today. Okay, let's go back, let's go one day back. Okay, this was today. As you can see, this was this thing. Okay, if you know what I just told you, what's a fair value gap. So again, in this, it's a 3-bar pattern. Okay, 3-bar pattern. Okay, in which the low of the third candle should not overlap with the high of the first candle. Okay, so we have this. As you can see, we go back. As you can see, this is the first candle, this is the second candle, this is the third candle. So this is a fair value gap. Okay, so whenever price comes into this area, okay, we consider it as a buy. Okay, this is how a fair value gap works. Okay, it should lead to a continuation of the trade. Okay, so let's go into the charts. Okay, so as you can see, this is the fair value gap which we marked on the daily. Okay, what we can do is just mark out that level from here. So okay, and whenever price comes below this area or comes near this area, okay, here hovers around, we try to buy. Okay, that's my whole funda. Okay, so this day the market gaps down. Okay, we remove this gaps candle gap. Okay, so whenever the price comes into this area, this is the daily fair value gap. As we know, the daily fair value gap. Okay, whenever it comes into this area, okay, we want to buy into this pattern, which I'm going to show you now. Okay, is this. Okay, so we are coming down, and suddenly we make a higher high. So this is what I call a shift in market structure. Okay, this you can even call your inverse head and shoulder pattern also if you are bullish. Okay, this is the pattern we're looking for. Again, this can be high like this also, can be like this also. Okay, can be like this also. Okay, let's see how this pattern unfolds here. Okay, as you can see, this was the high here. Okay, this one. Okay, it came like this here. Okay, this was the high. Okay, this was the break. Okay, it has not broken it yet. You want to close above this. Okay, this was the close. Okay, and on this you can just buy directly. You can maybe keep your stop loss here. Okay, and target these highs somewhere. Okay, this is a previous day high. This is a good target. This is a good target because of this equal highs, as you can see. Even this is a good target. We'll target this. Okay, yes, as you can see, the trade played out very well. Okay, so coming to this thing, so this is my position. So that was not my position. I made around 4.5k. Okay, 4.5. Okay, 4.5k. Okay, same thing, same idea. Okay, nothing fancy dancy. I just waited for it. I just put an alert here. Okay, the moment price traded here, I waited for this pattern to form and I bought into this and I sold here. Okay, simple, no magic dandy in this. Again, now if you had become greedy, okay, you could have lost also, by the way. It's very important to take partials. Okay, you should always take a profits on a particular target, this thing. Okay, as you can see, the market comes down to the same position. I would have hit in your stop loss. Okay, there's another way you would have bought here, but this is not the model I'm been talking about. So before closing the video, I like to show you the order book also. Okay, again, if you go to my Twitter channel, right, okay, and I do post my verified PNL. Okay, so you will actually come to know what the trades I had taken. Okay, so you know if this is real or not. Okay, everything will be fake. Okay, so this was taken at 9:44. Okay, we'll see 9:44. Again, I took a position in the May. Okay, 9:44. Okay, so somewhere here. So somewhere here we took the entry. It was here, right? Here it was took. Okay, so the total duration of the trade was around 30 minutes. Okay, so that's the amount of time. This 43, yeah, around this was 1 hour, but this futures trade was closed within half an hour. Okay, this I let it go. Okay, little further, but as it started to break down here, okay, I close the trade. Okay, so you can see the precision. We get in here somewhere. We get in here somewhere, right? Where do we get in? We get in somewhere here and we get out somewhere here. Okay, again, we're not catching the absolute bottom, and we're not selling at the top also. This is enough. This is more than enough. Okay, same thing here. Okay, I will share this model later on, maybe in the upcoming videos, but you could have bought here somewhere here and probably sold here, maybe, or maybe here. Okay, again, you do not need to buy here. You do not need to buy here. Okay, this is enough. Okay, or it's all about making money. It's not about bragging. Okay, so yeah, so this is how it plays out. Again, before I close, I like to tell you that again, this has to be used with context. Okay, Nifty, okay, had taken out previous month low. Okay, so whenever we hit a very important low, right, let's say previous month low, previous month high, that's considered as a short term discount or premium according to the level hit. Okay, let's say we hit a previous month low. Okay, that means we have hit a discount for that time. Okay, discount meaning it is little cheap for that timing. Okay, so that's when something is cheap, what do? You buy it. Okay, when Nike is on a discount of 80%, what do? Buy it. When let's say Nike now increases the price, what will do? You'll sell the shoes. I mean, people don't do that, but yeah, that is the funda, total, the actual this thing. Okay, to sell something when it is high. Okay, you want to buy something when it is down. Okay, you want to sell something when it is high. You want to buy when it is low. Okay, that's how the market has been working for all these years. Okay, it has not changed. Okay, not even after all this, you can say automation, algos have come, the same thing still persists, because it's the human emotion. When it goes down, you buy. Goes down, you buy. It goes down, you buy. it goes high, you sell. Okay, that's how the market is. Goes down, you buy. It goes high, you sell. Yeah, that's it for today. I'll see you in the next video. Thank you.